Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital Alive, a trading for law. It's been a minute, but we're back at it. It is Tuesday, July 7th, beginning of a new month. All right. First and foremost, though, all glory to the Most High God. Let's bow our heads for a quick prayer. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, I ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. Amen. Can the church say amen? Amen. Let's begin. Before we jump into the charts, I just want to say this. There was a time I used to sit down on the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realizations. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you will ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And at I'm the Trader Capital, our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, as the fund manager. It's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are two types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At I'm the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. Weekly target going into this week, as always, is 3%. Mental check-in, feeling generally okay. All right, excited to see what price action has in store for us today. Excited to continue to grow, all right, and get 1%. But I'm very happy and pleased with my progression in my trading. So I'm just happy to show up each and every day. Exercise my discipline muscle in terms of following my procedures, my protocols, my system, my processes, and just letting the outcome be out of my hands. All right, but super excited. Nothing of note really going on of note right now to mention that could affect or impact my decision making, right, in the charts. That's what this mental check-in is always about. Just a quick check-in to see what's going on. You know, like, obviously I'm not going to get into details of anything that's going on, but if something's going on, I want to mention it. So when I look back, right, I know, hey, this was what's happening and this is how it played out in the market, right? If I wavered or, stuck to my guns in terms of what I'm looking for in the charts, or if outside influences came and impacted me. But anyway, I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. Can you tell that I missed you? Can you tell that I missed doing this? Just yapping right off the beginning, you know what I mean? News is Tuesday, July 7th, all right? We're almost done with this year already, right? We're almost done with the year. Anyway, we had high impact news come out at 8:30. That's the only news today. So we have news today, all right? Making an optimal day to take a trade. Yesterday I did take a trade and it really wasn't an optimal day to take a trade, but we'll talk about it. We'll get into it later on. Risk going into today. Well, I'm still gonna elect to remain at 0.25 of account size, and we have a max of 0.75. I'm still not ready to adjust that yet. But I'm getting close to being able to increase risk. But for now, in the beginning stages, let's just remain at low risk where we're at today. Weekly program, let's go ahead and we have yesterday's range, all right? So let's go ahead and review price action overnight to see what that weekly program is saying, and we'll proceed with our 3-step trading process, all right? Different day, same processes, all right? So let's get into it then. Let's get into it. Yesterday wasn't really an optimal day to take a trade, but there was some clean setups, morning, lunch, and PM session. I ain't being going crap. It was nice. It was nice. Anyway, let's get Monday's range up in this beat. From 12 a.m., right, to 12 a.m. We note the lowest low to highest high. That will give us our Monday's range to determine our weekly program. And as you can see, we've taken Monday's low, okay, here. All right, so we've established our weekly program as a sell program, okay? We do have relative equal lows all the way down here. We got a bunch of sell sides down here. Let's go ahead and adjust high time frame ranges. 20-day is good. It got adjusted from this high. Now this is 60-day high. 20-day high is up here now. Right, yeah, 20-day high is up here. 20-day low stays. Previous week, we're good on that. Let's get previous day. Also, if you're going by previous day's range, all right, as you can see, we've taken previous day's low here. So you'd be coming into this session already into this session this morning in a sell program, which is in line currently. Obviously, yesterday's range, daily previous is the range that we're using, and it was taken. It will be in line with your weekly, okay? All right. We have sell side relatively close here. So that's currently my draw on the higher time frame. We're back below this 4-hour inefficiency. So now I want to see price, if it does come in here, use it as what is supposed a reclaimed SIBI. Targeting sell side down here. All right, let's carry on. Don't spend too long here. Already spent too long yapping. Yabba do. Different day, same processes, all right? Step one is condition in our 3-step trading process, all right? Determine the bias. In order for me to do that here, all right, there's different ranges that you can use to determine your bias. For what I do, I use current day's price action to determine my daily session, okay? Like I said, you can also use previous day to determine your current day session, but I like to use current price action on the day to determine my daily condition. And I go from 12 a.m. Tuesday, 12 a.m. to current price action. I know the lowest low to highest high. Just like that, I got my dealing range. And whichever side of that dealing range gets taken, all right, will determine my daily condition going into today, all right. That will be my program for the day. Above dealing range, we have Asia session buy side as potential draws on liquidity. Once you identify your dealing range, all right, you want to note key highs and lows above and below that price could potentially draw to, right? It's all about the draws on liquidity. And should I need anything more higher, we'll go ahead, but we see that. I doubt it's going to come high, but who knows, right? Below dealing range, we have Thursday, July 2nd. What is this? Asia session sell side. Below that, what else we got? We got Thursday's low, all right, previous daily low, Thursday's low. I believe that's really all. Yep. And we're ready for kickoff. Ding, 9:30 open, decent size open range gap. Optimal trading day, we like that. We like the size of this open range gap here. I like that. It is above price, okay, so we gap down, so we have a discount gap down. Came close to dealing range a low, but we didn't take it. We've come up to a previous daily low now. Now we can use this key level to frame an entry on without having either side of dealing range taken, because this in itself also is a range, right? It's a previous day's range. So it gives us an entry there. I'll be interested. Let me make sure I'm on the right one. Yep, that's the one. Yesterday the trade was on this account, which is coming out drawdown. We like that. We like that. Slowly but surely we're coming back out of drawdown. Taking our time. What do you do, Matt? We kicking off. Now we traded time and price theory. So we're waiting for time. We have time right now. Waiting for price, time and price to align. And when we're looking for certain characteristics around that price level, okay, which tells us potentially where these candlesticks could be heading, okay, because is an algorithm, all right, is running on code, and our job here is to track and identify what the code is doing, right? What IPTA is doing. That's our job here, to track and identify IPTA, all right? And we do that through time and price, right? Like a graph, x-axis, y-axis. Our x-axis is the time, y is the price, okay? Time is more important than price. If schools taught anything invaluable, that was it. A line graph. X and Y axis. If they taught anything valuable, that was it. Right? Heading to dealing range sell side right now. See if he's gonna smash it. All right. Taking dealing range sell side. Where's my alert? It's delayed, bro. Like, what is that about? Anyway, we establish our condition for the day as a sell program in line with our weekly program. That's crazy that it didn't alert me, man. What's that about? Oh, it's trees, 30 trees, 30 trees, 30 trees. We're about to take Thursday's July 2nd's Asia session sell side, smashing that right now. So we've taken liquidity below external liquidity. Right now, all I require, look at this delayed thing. All I require is a market structure shift above to partake in a retracement setup. I almost said the wrong thing. It's only 2 trades and I've been messing them up. It doesn't even make any sense. 2 types of setups and I've been messing them up. We have a high here actually also. I would be interested in that as well. Taking liquidity below. This is still the high that needs to go. Typically, I'm like below a 1-to-1. Excuse me. Anything below 470? Okay, no, we're good on that. Get a market structure shift up here. All right, I'll be interested in a retracement buy. We lie. All right, it's giving it to me. I'm gonna pull the trigger. Pull the trigger. It's 4, 5, 7. It should be 3, 4, 7, 5. We're in there. Like swimwear is out of my hands. Is in the market, the model, and the trade management's hands. And there's nothing I can do about this trade now, except for just pay attention to the candlesticks, right? To see if they're giving me the characteristics that lets me know that I'm on side or offside. Anyway, we take this market structure shift, will take me out of my trade and will confirm a continuation sell. Last line in the sand for me here, though this will be a warning sign if we get somewhat of a body closures somewhere here. Obviously that would be close proximity to my stop regardless. This is a counter trend trade, all right, because we already established that we're in a sell program, right? So bear with me, because I will be in. We got a closure below that. That's my first warning sign that I'm offside. Take the L with it on the chin, right? And I'm gonna watch this continuation sell setup. I'm not gonna jump straight back into another setup, okay? Thank you very much. We're watching this continuation sell here. Nothing wrong with the trade I just took, right? It just is what it is. Let's see what the 125. I can eat that. I can eat that. I can eat that. I'm gonna get a quick snapshot real quick, and then we're gonna watch of this L. Let me delete this real quick though. 1 second while I get the snapshot. Nothing wrong with L's, you know what I mean? Let's watch this. It would have given us one contract here. Taking it to here. I'll now be waiting until post 10 o'clock, right? To engage in anything. I took my open range setup, took a loss. It is what it is. Now we wait. Now we wait. On a 1 minute here, coming to an efficiency, market structure shift down in here, continuation sell on a 1 minute. Now imagine I had just jumped straight back into this one. I would be shitting bricks right now. I'll be getting smashed out in a bit. It will be smashing me out right there. It will be smashing me out. So I'm happy for my patience, all right, in taking a loss and just being like, okay, that's okay. We'll wait for next time, right? We'll wait for the next time. Next time, and then price and alignment and then we'll go from there, right? Don't be so quick once you take a loss to jump back into the market. Take a breather, let the market do its thing, wait for the next opportunity, the next time and price to of alignment, and then see what price is saying then, innit? But anyway, that would have been 2 unnecessary losses if we had got back right back in there. It was a body closure too, so it did confirm. But this right now, we're watching this retracement. Just gonna let the market do its thing, you know. I'm waiting till post 10 o'clock to engage again. This is my first loss in a minute. I ain't gonna lie, this is the first loss in a minute. It's been a while. They don't even phase me anymore though. The losses, they don't even phase me. It's just, it's a cost of doing business, ain't it? It's a cost of doing business. When you take a loss, it's a cost of doing business. Just like if you owned a restaurant, if you owned a business, right? Let's say you do AC repairs. You're gonna have to buy supplies, right? You're gonna have to pay for the supplies. It's just the cost of doing business. But as you do more jobs, right, you'll make that money back, right? Your output will always, not the output. That's not the wrong terminology I'm looking for. Your profit, right, will always, well, that's the goal, right? For the profit to be more than the losses, right? Of the day, is that what I want to say? I don't really want. I'm waiting until 10 o'clock anyway. So whatever is happening in price right now, is I don't care. I don't really even want to see it to be intrigued into getting into anything right now. So let it do what it's doing. I'm trying to think of a caption for this loss I just took. I don't want to say first loss of the day, like, you know what I mean. Let me just put losses. Because I ain't trying to shy away from the losses, all right? It's not always sunshines and rainbows out here, you know what I mean? It's like my journal, isn't it? Me don't like to see other people's shit, you know what I mean? Watching this retracement setup here. It wasn't too bad of a loss though. It wasn't too bad of a loss. This means I can take about, depend on about 2 more trades on this. I can take at least 1 more for sure. 2 definitely. But we progress and we move on. You took a loss, you took a loss. It is what it is. So 1 trade, 1 loss, all right? We have another opportunity, all right? Only when we take losses, right? We have another opportunity to get back into the market. For me right now, anyway, that's how I'm proceeding, right? If I take a loss, I will allow myself another opportunity to get back in the market. But if that trade was a winning trade, I technically would have been done for the morning session. Decent size open range gap though, so I want to see some good price action. Right now I ain't seeing nothing too grandiose, nothing too, enticing. Just a whole lot of trickery right now in this open range. Whole lot of back and forth. I'm watching this on the 1 minute though. This continuation. No continuation, sorry. Bloody hell, this retracement. So we'll be waiting. We'll be waiting till 10 o'clock, post 10 o'clock, post opening range. See what that's saying. Took our first loss in a minute. First loss in a while and during opening range, obviously. Warranted. It's fair. It's fair. It's fair. It's only fair, right? It's only fair. Da-da-da-da-da. And just by being patient and not jumping right back into the market, I saved myself another loss, right? But just giving myself like one opportunity per time frame, right? I think that's really been a good addition. Because I would have definitely jumped back in here and I would have been like, oh, another one, you know, unnecessary. But you live and you learn, right? And for us, majority of us humans, is through pain is how we learn. We don't learn through the nice. We learn through pain. And it's not just a one-time thing. It's a continuous pain that we put ourselves through until we hit our breaking point. Because everybody has a breaking point, right? Some people obviously has a longer time to get to that breaking point than others. But everybody has their breaking point. And at some point, you're going to hit your breaking point and be like, okay, this is enough. What am I going to do different so I can avoid continuously doing this to myself? Because I don't like this feeling, right? But not everybody can do that. Some people are numb to it and they just carry on. And that's why this is the hardest thing to do, right? It's about overcoming yourself. And it's hard to overcome yourself. Sometimes we also make a lot of excuses for ourselves, right? We make a lot of excuses for ourselves. Even if I wait for that one here, it still would be in there, but let's see. Because maybe, potentially, this swing, you know, either way, still wouldn't be looking good right now. A lot of nothing right now. Sometimes the market rewards you for making good decisions. And right now, I feel good about my decision. 9:50 macro. We're about to kick off in a couple seconds. About less than 20 seconds now. Open range, I should probably just wait till like 9:50, you know. But we still get some good setups during 9:30s, you know. 60-40. Worth the risk for me anyway. I would say worth the risk. I'll take those risks every time. Because I know what my model can do, right? I've seen enough now. I've collected enough data now to know what my model can do. Like literally, I have the proof, right? This account right here was in 1700 drawdown. 1,700. I don't want to say that number wrong. But look where it is now. Now it's in profit. Okay? So I know the potential of my model. I know what it can do. So I ain't stressed about nothing. This was up and now it's in drawdown. Now it's coming out of this drawdown, right? So that's just adding more confidence, right? More confidence. Without confidence and certainty, you are riskier. You're at risk. Giving me more confidence, more certainty that, hey, yes, I'm going to take a loss, but what I have here, my model, my procedure, my protocols, my 3-step trading process can get me out of that drawdown, all right? Just by following it and sticking to it and managing risk appropriately. That's the most important thing. The holy grail of trading. Risk management. Anyway, draw on liquidity is Thursday's low. All right, depending on how price behaves there, we have more liquidity below price. But remember, on the higher time frame, we have a huge draw to the downside here. Hold on, let's get back on the higher time frame. We have these relative equal lows. Previous week's low. We have another previous week low. We have another 20-day low, which is also a previous week's low. We have a relative equal lows right here. Right here, we also have Monday, Thursday's low. This is currently my draw on liquidity, these relative equal lows, and then this relative equal low into the remainder of this week, weekly inefficiency here. If you go on the monthly here, we have a monthly inefficiency as a potential draw. Yeah, my monthly is black in it, but my background is black, so that makes sense. You know what I mean? You know what I mean? Make that make sense, my girl. This is the draw on that monthly time frame. Okay. Right, is the lower portion of the weekly. So taking this sell side, this low, right, into that monthly draw. That is where I'm seeing price heading to right now. Okay, but it all depends on how price behaves after taking out these relative equal lows. What was that? What was that? I'm seeing this on the 1 minute for a continuation sell. Don't know if it would have given us any contract or anything to partake in that, but we can check. One contract, it definitely would have been over 100 ticks, 100 handles here. What is this? Anything below 506? Yep, definitely below 506. So we'll be looking at candlestick bodies for exits and management. And -1 is right here. So let's see if it gets us to -1. Oh, we took buy side. But in this one here, okay, hold on. I missed this one. It's okay though. We're going back at it. On the 1 minute. That's my thing too. I feel like I find myself super focused on the 15 seconds. Like I whatever my entry time frame is, I really be like fixated on that time frame, and I don't really pay too much of an attention to other time frames as I should. But that is something I'm working on. So I need to be looking at this, and every minute look at the 1 minute, every 15 minute look at the 15 minute, see what it's saying, right? See what the candlesticks is saying. 15 minute I don't really give two craps about, but the 1 minute I need to be paying attention to it as well. Anyway, we took dealing range sell side, right? Came back into an inefficiency above it, market structure shift back below. This obviously confirmed a continuation sell. Because it was an inefficiency, right, our stop would have to be above, like right here, our stop would have to be above this high, including the remainder of this inefficiency, right, at the high. It can be at this high too. This is just like minimum risk, but preferably I would put it up here on this swing high because I like my swings as my stops. Hold on. Obviously, this is obviously heading to its target here. Hold on. Let's delete this. just so we can talk about what we're talking about right now. And even here, we take buy side above it, market structure shift back below. 1 minute was just giving us some good stuff here. Bing, bing as well. Potentially just a little bit too early. I should have factored this 1 minute inefficiency into my trade. But that's cool. That's cool. We live and we learn. Anyway, I was doing this, seeing from here to here would have been my entry, and minus anything below 560. We are below 561, so we'll be using the bodies for exits. Let's see if he would have even given us any contract size here to up there. Yeah, wouldn't have given us any contract size, but down here, yeah, would have probably, yep, given us one. Maybe the body here would have been fair too. All right. I see you though. I see you. So now looking at it, right, for opening range, especially before 950 macro, I should really be eyeing up the 1 minute more than the 15 seconds, okay? More than the 15 seconds. But we'll collect the data on that, right? And see if that makes sense. But for now, I think more than the 15 seconds prior to before 950, right? 930 to 950. Maybe, all right? Maybe not, all right? But it's something to pay attention to, all right? To see if it can be a procedure that we can put into place, right? Let the data do the talking. Let the data do the talking. Excuse me. Less than 2 minutes until open range is complete. Oh, let's see if that one would have given us our negative one, the one we were just looking at. Nope, not yet. Not yet, boy, not yet. It said I ain't giving it to you. What you say about what? What you say about my mama? All's fair in love and war. All right, let's get ready for this open range, dealing range. I'm waiting for this 1 minute candle to close first, so let's let it close first. I need to see the line on the 1 minute first, you know what I mean? Make sure we switch the counts. Yes, we have switched the counts. All right. Let's see if we get another opportunity here. Post open range. If we don't, right, until we have up until 10:10. If we don't get anything by 10:10, all right, then we'll be waiting till after first hour of trading, which will be 10:30. And that's just how you simplify this thing, right? You have a time and price. IPTA signatures, a model that has IPTA signatures, right? And IPTA signatures are time, right? And we have inefficiencies and liquidity, right? Because she moves for two reasons, right? To seek liquidity above and below price and to reprice into any inefficiencies above and below price. And if it's not doing that, it's consolidating. So IPTA has what? 3 signatures, I would say, right? Moves on time, inefficiencies, and liquidity. So you need a model that encapsulate at least 2 of those things. Definitely time. That is the most important thing here. Time and then price. Got one more bullet. One more bullet this morning. And it will be A-okay if it's also a loss, right? Nothing wrong with that. All right? Okay? Like I said, I don't like taking them losses. But right now, where I'm at, they don't faze me. I don't like them, but they don't faze me. In the moment, I'm like, ugh, whatever. Just took a loss. Bah. But like, it still doesn't faze me because, like I said, I've got enough data to know what my model can do, what it offers. So, I'm impressed. I'm actually putting together a beginners because I understand that for newbies, I've been actually getting a lot of new people like reaching out and like asking questions about how to start and where they need to be, and like what I'm doing here is a little bit advanced, right? If you don't know what a candlestick is and shit like that, you don't know how to read the chart and you don't know the ins and outs, right, of trading, it'll be a little bit hard for you to pick up exactly what we got going on here. So I've been putting together a little not basic, it's because it's not basic, it's still quite actually high, quite technical, not too technical though, just like what every new and aspiring trader should know, right, before even entering the market, right? Something like that, of that nature. We're gonna go over how to read the chart, candlesticks, candlestick patterns that you need to pay attention to, really and truly. Just a preamble before you get to, I guess, what I'm teaching. We're about to smash open range sell side, confirm our session bias as a sell program in line with daily and weekly. He hasn't taken it yet though. Like, it'll be hard for me to talk about IPTA and somebody don't even know what the hell a candlestick is. They don't know how to read this chart. They don't know what time and price is. So I'm putting together a little something behind the scenes, a little, training session. That if you want to learn from me, you have to know these things for it to make sense. You know what I mean? Some people don't even know what a stop loss is. Some people know what a stop loss is, But they choose not to use it, right, Matt? Oh, mate. Ugh. Yes, 3 minutes. We got 3 minutes for someone to shake here. If not, we'll be waiting until 10:30, post 10:30. No brakes. Oh, gas. Now, the characteristics can happen outside of the macro, right? As long as it's taking is rating the swing lows inside of the macro. All right. All right, all right, all right. As long as you accept it, right? You know the risk. All right, taking dealing range sell side, dealing range, opening range sell side. All right, this is the buy. It will need to be a V-shape buy for me to be interested here. It takes it. It did take it. It did take it. Nah, I may not like that though. No, 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 950, 950, 950 right there. Gave it to me. What I don't like is this wick here. It closed all the way like down here. But still meets the criteria, so I engaged. Still have time on my side. Da 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 da. Allowed me 2 contract. Let's unsync this. A loss here, right, would confirm a continuation sell. And we'll watch that. I won't engage, right? Because I said 2 trades per a session. So I'm just gonna eat the loss. Yep, 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 yep. We're gonna eat it, we're gonna eat it. Where is it? 128. Okay, they're not bad L's. They're not bad L's. They're not bad L's. Usually I was expecting like 200 or like, you know, something like that over L, but I can eat those two. Those combined are like one trade for me. Anyway, we're watching this continuation sell here. Would have given us 2 contracts. Let's get this snapshot though, because I don't want to shy away from the losses, right? I don't want to be rainbow, all rainbows and sunshine here, paying attention to just the wins and ignoring the losses, because the losses is how I grow, really and truly. Anyway, let's grab this here. It was just a matter of time, man. It was just a matter of time. We are going against the weekly, the daily, and the session, right? In terms of a buy-in, and everything is telling us, hey, we should be selling. We need to be a seller of this market. So maybe now is the perfect time for me to have a retracement account and a continuation account, right? Anyway, we'll be hitting -1 right here. That would have been it. Once we got taken out, okay, confirmed a continuation sell, and that's the setup right now. Really, I like that -2.5 is lining up with this previous low. So I'm watching how price gravitate towards that. Let's see if it matches with any of the lows that we have below. Yeah, this is like the most closest one. We have -4 right below this sell side here. But this is my next draw on liquidity, so I'm watching how price gravitate towards it. But we would have made our loss back here. Okay, we would have made our loss back here. I have the wrong thing on here. Which is a-okay, all right? Now, this setup, I would be okay with jumping right back in, right? Because first we have the time is great. I like the time. The 30s is like lower than obviously the macros and the post 10 o'clock post opening range. This setup post 10 opening range, once I took this loss, if I hadn't already taken a L during opening range, I would very much be interested in jumping back in here. Unlike the open range, I don't like to risk it too much because it can be messy. It can be messy. As you can see, if we had jumped back in this, it would have given us a loss. Unlike after opening range, right? Price tends to get a little bit cleaner. All right, it tends to establish where it's heading to, and it tends to kind of just head to where it wants to get to, right? But open range, you can get a lot of fluttery and a lot of up and down price action because it's the open range, right? It's the first 30 minutes of the market opening in New York, so a lot of orders like keep be coming in and out, and so it's very iffy in the open range, right? This is riskier than any other time, right? But there's obviously still good setups in that time frame. Anyway, my point is the point I'm making here is that here I would be more inclined to get back in after taking a loss, right? During post open range, I'll be more inclined to get back into the market straight away after taking a loss if it confirms the other side, unlike during the first 30 minutes of the market open. Okay, so that was my whole point I was trying to get across. I don't know if it got it across, but yeah, I'm happy with what I'm seeing. Okay, even though I took all L's today, I'm still happy and pleased with the price action that I'm seeing and my understanding of what I'm looking for in price, and also just collecting data in how I can adjust and fix my procedures and protocols, right? And how I can eliminate. I know I can't obviously get rid of all losses, but I can obviously control my exposure to certain losses, and that's through data collecting. About to hit the draw on liquidity here. Smashing it. -2.5 getting smashed. On the way to -3. -3 smashed. Next draw is this sell side here below price. Okay, daily, weekly, session, everything was saying sell, sell, sell. All right, and we took well, at the time, or the weekly and the day was saying sell, right? And we took a retracement, failed. Another retracement, failed. All fair in love and war, baby. Anyway, let's post that bad boy. Preserve capital. That is, oh no, don't help me write this. I don't need your help. Just correct my spelling. Our number one job here is to preserve capital. Nothing wrong with taking losses. We don't like them. We don't like them at all. I'm a very sore loser. I am a very sore loser. Anyway, this trade now here would be at break even, a little bit better than break even, and if you had obviously any more contract left in it. So now, like I said, out of the losses is when I really grow and just I power up. But we're gonna go over our trades, do a trade performance review, and be done here because my morning session is done. So there's no need for me to. That's something too that I'm learning and growing. Just if I'm done, I'm done, right? There's no need for me to continuously just be in here and be tempted to do things, right? Because if you stay in front of the candlesticks, they will talk to you, but like, Alice, I know you see me. You see this setup. This is a nice, sexy setup. We have time. We have price. Everything is in alignment. Get in. Forget about the 2 losses that you took already. Come on, baby girl. You can do it. That's how if that will be talking to you sometimes, right? They just be trying to tempt you, and you just have to be strong, you know. But anyway, solid morning. All right, solid morning. Right. I don't like the L's, but overall, solid morning. What we're taking out this morning, though, right, is during that first, at least that first 20 minutes, right, before 9:50 macro, because obviously 9:50 is a macro, and their high probability setups are formed during macros. So for the first 20 minutes of trading, right, my main focus will be on the 1 minute time frame. I'll be looking for setups on the 1 minute time frame, just because it's a higher time frame than the 15 seconds, obviously, and the 15 seconds tends to give more false. Tend to give more false setup, right? Because it is a lower time frame, right? It's a lower time frame. So first 20 minutes of trading will be more focused on the 1 minute, all right? Just looking for if there is a setup on the 1 minute, I'll be interested in taking it. If it goes against the 15 seconds, I would be hesitant. I would hold off on that and just watch it do its thing. But 9:50 macro, everything after that, everything goes right. We're set on the 15 seconds, jumping back in terms of setups. Because if I had did that right today, right, that's always what I'm trying to do, improve and use the data to be like, okay, how could I have avoided this loss? Is it possible that when I take losses, that's the first thing that's going through my mind. Could I have avoided this loss? Is there something that the trader did right that went against the analyst that we can avoid for the next time, right? For here, right? If I had obviously had this procedure in place already, right? I could have avoided that first loss that we took because looking at the 1 minute, right? After taking dealing range sell side, confirming our condition as a sell program, okay, we did come back into an inefficiency above it, all right, and we caused a market structure shift below it. Here, it confirmed a continuation sell on the 1 minute, right? It confirmed the continuation sell. When it came up into the inefficiency here and took that buy side on the 15 seconds, right? Obviously, I wasn't really paying attention to the 1 minute in terms of, hey, seeing that, hey, it's coming into an inefficiency on the 1 minute, right? So I wasn't really much paying attention to that, especially in the opening range, because there's been times where I'll not pay attention to the 1 minute, pay attention to 15 seconds, and it'll pan out. Obviously, that's depend on the time of the setup, right, as well. But here, especially in that first 20 minutes here, that yellow to this solid green line, definitely need to be paying attention to the 1 minute. And even if it wouldn't have given us an entry because our stop would have been here, that's fair. We're still watching it. We're still in that until this high goes, right? This trade is still valid on the 1 minute. This continuation sell until this high goes is, for me, is still valid. And it's the first presented fair value gap as well at that. So come back in, market structure shift. No. On top of this, right, we also had this continuation on the 1 minute as well. Right here. This was the open range setup. This, for me, wouldn't have given me an entry, but that's fair. Market structure shift here until this high goes. All right. This inefficiency is still valid. Okay. So that would have stopped me from this continuation. I mean, this retracement here on the 1 minute. Because stop from here technically would be up here. Cool. Give your re-entry right here. Post 9:30, we came back into that low here. Okay, that's where I went wrong this morning, right, during opening range. That's where I went wrong, but obviously I didn't know what I know now. So it's all data collecting and allowing the data for you to adjust, right? As you collect more data, you refine and you adjust, and you adjust to the market condition, that what the market is giving back to you. But yeah, jumping back in here was completely fair, was completely valid. I would do this here than during opening range, right? Jumping back in an open range is just risky business. All right, we're 1% better today than we were yesterday. Okay, just because we showed up and we took L's. All right, there's nothing wrong with the L's. I know for a fact, right, down the line, I'll be making those L's back. Even in this same session, right, I'll be making the L's back. So I'm not really fussed. I'm not stressed. I don't feel no type of way that I didn't get to jump in on this setup here and be part of this move right here. That's okay. I'm still happy and pleased I was able to identify and watch it happen live in price action, right? And collect the data, build the experience for later on experience. Another thing too that new traders fail to do, and which what caused a lot of majority of 90% of the new traders to fail, is that they don't talk to themselves in a positive manner, right? In their journals, once they take a loss, all right, the way that they talk to themselves in their journals, or that's just after making a mistake, right, is it doesn't help the psyche of the trader, right? Here you're supposed to, even if you're doing stuff wrong, you're supposed to, in the beginning stage on and continuously, you're supposed to lavish yourself in positive self-talk, right? Yes, you made a mistake. Acknowledge that you made a mistake, but it's a lesson that you're learning, right, to get better, that you won't make that mistake anymore. Don't talk to yourself like, oh, I'm so stupid. Why did I take that trade? Why didn't I jump back in when I took that loss, when it confirmed this trade? Oh my God, I'm so dumb. I'm so this, I'm so that. That is not helpful at all, right? In your journal, you want to talk to yourself. You want to sunshines and rainbow in your journal. All sunshine and rainbow in your journal, right? Talk to yourself with some some life, some positivity into yourself, right? Yes, I made a mistake here. I understand that, hey, for this time I can jump back in, all right, and I was going against the market, but that's okay. I'm still happy and pleased, right, that I was able to identify that, hey, when I got taken out, that it was confirming a continuation sell setup, and I'm happy that I was able to identify it. I'm also happy that I was able to identify the draw on liquidity and priced it exactly as I wanted it to do. It went to exactly where I wanted it to go. That's how you need to be talking to yourself, okay? In these markets, that's how you need to be talking to yourself. You need to be an ally, okay? We're typically an adverse, what's the word, adversary? I don't know what the word is. Anyway, we go against ourselves, All right, we go against ourselves, and everything else is already against us. All right, so we have to be for us. Okay, we have to be on our own sides. But anyway, solid stuff this morning. All right, solid stuff this morning. Let's do a review. Let's review the trades for the morning. Do a trade performance review. I know it's only been an hour, but and let's be done, right? Let's be done. There's no point. We've seen what we need to see here. Okay, for the morning session, I don't need to continue and drag this along, right? Obviously, I'll be watching post 10:30 and see if it gives us any setup. But for me personally, in terms of taking a trade this morning session, that's it. We took our 2 losses. We're done. So let's get back to this morning. Talk about the trades that we took and the trades that we missed. And be done for the morning session. I will be trading this PM session though, for sure. I will be back for PM session, see what PM session has in store for us. But yeah, anyway, we came in, all right, we took dealing range sell side. All right, we established our condition for the day as a sell program. Okay, so we were really looking to be sellers of this market until, right, dealing range buy side gets taken. All right, our main focus is to be on the side of the dealing range that was taken. Doesn't mean that we can't get on the other side, right? Because that's what I tried to do today. And obviously, price was just so determined to go lower, right, that it just, the retracements just wasn't there. And it's okay. There's nothing wrong with that, right? We saw this, we trade to and through external liquidity. We took liquidity below it, all right? Market structure shift, displacement, market structure shift back above it. Fair retracement set up here, okay? However, if you look on the 1 minute, right, it was coming into, when it was taking buy side here, it was coming into an inefficiency, right? It came into an inefficiency on the 1 minute here. Market structure shift back below. That confirms a continuation sell setup on the 1 minute, right? So now I need to focus on the hierarchy. I don't know if I'm saying that word right, but I know what I'm saying. The hierarchy, yeah, the order in which the order of the time frames that I'm using, right? When it comes to certain subs, I tend to really be, like I was saying earlier, I tend to focus on the time frame that I'm entering on, which right now has been the 15 seconds. It's been like my main focus. I tend to lose sight of the 1 minute, right? And not really pay attention to the price action, what it's saying to me on the 1 minute. Obviously, the 1 minute takes precedence over the 15 seconds. So specifically for at least the first 20 minutes of trading from 9:30 to 9:50, all right, specifically, I will be really mainly focused on the 1 minute setups, okay? If a 1 minute setups happens within that 20-minute period, I will be more inclined to pay attention to that rather than the 15 seconds, okay? Any other time that I trade, it's fine. I will need to pay attention to actually put 10:30 and 1:30 as well. So I'll be collecting data. I shouldn't say I'm adjusting. I'll be collecting data on doing that. So for now, right, I'll just be watching the first 20 minutes, right, in terms of watching which time frame has the setup. And I don't know if I'll be partaking while I'm collecting the data, but depending on how the setup looks, we'll see how that goes. But anyway, yeah, we talked about this already, okay, and it confirmed a continuation on the 1 minute. Once obviously you were taken out here, we did have a continuation on the 15 seconds as well. But like I said, during that first 20-minute period, it's just best, all right, because it's already a low probability trading time anyway. So it's just best to just focus on my higher time frame in terms of my entry time frame, right? Obviously 1 minute is not a higher time frame, but compared to the 15 second time frame, it's a higher time frame compared to the 15 seconds. So that's what we're taking out of today, okay? And this was the setup, all right? This continuation sell wouldn't have given us an entry because my stop would have been up here. This swing had the first candle in the fair value gap, okay? Would have been here and it wouldn't have given me an entry. And then we took buy side above external liquidity, market structure shift back below, even left a tiny inefficiency here, okay? Even if you didn't catch this one, all right, you could have been able to catch this one down in here, okay? Nothing wrong with either setups. Continuation, very fair, very clean setups. And then post 10 o'clock post 10 o'clock, we take open range sell side, establishing the session condition as a sell program, which is in line with our weekly and our daily. So everything here at this point, right? Once we traded to and through external liquidity here, open range sell side, right? Everything here was saying sell, sell, sell. We traded. You know where I messed up as well too, on this setup here, which is fair on me. As soon as we took this high, right, and price dropped all the way down here, I'm like, yeah, I don't like this. I don't like this at all. Anyway, for a V-shape entry, right, this is what I was classifying this as, a V-shape entry, V-shape retracement setup, because we came down to and through external liquidity, swing, displace, right back up, market structure shift, right, back above the external liquidity. For a V-shape entry now we're adding more precision protocols, all right, in terms of what we're looking for in our model, right, to eliminate certain losses that are unnecessary, right, certain trades that aren't like pristine and crisp, right. V-shape entries, because V-shape entries are like, I wouldn't say less probable, but I prefer the raids with the market structure shift rather than just a market displacement with market structure shift. So I want to require more out of those setups, because you know, you can classify anything as a V shape, right? You can classify anything as a V shape. It has to be a displacement, right? V shape entries. I require a fair value gap to be created in that displacement leg. Okay. Yeah, we did have that here. It's a tiny one, but we also did have these imbalances as well. Yeah, for sure we have that. So, all right, okay. It did have it, but it wasn't clean, but it did have it. It has it in there. So, displacement, market structure shift above. What I didn't like, and I think I stated it as the trade was happening. What I didn't like was that, you know, we took that liquidity in that, and the body, right, closed all the way back down here. That's not indicative of the price action that I want to see, you know, in a V shape. Yeah. I'm trying to see, right? I'm just trying to see if there's anything that we could have done differently, right, to avoid it. If it was avoidable, some days it's not avoidable. Right? I'm not gonna, losses are the only thing promised to us. I'm not gonna avoid all the losses, right? But the ones that I can, I would like to, and the only way to do that is by analyzing, all right, the trades, the losses, and extracting information that you can from it, and just seeing what the information is saying. Anyway, on this one here, because we're already in a discount, I wouldn't be jumping in straight away as we took ourselves out. I would be waiting for a body closure below this short-term low, which we got here. So my entry would have been on this candlestick right here. Because we're in a discount, I require just a little bit more from price, all right? I would have required a body closure below this short-term low, which we got right here on this candlestick. And then this next candle would have been our entry candle. I'm trying to see. At the time, right? At the time, it did look like a very bullish candle, right? And especially when we took that market structure shift here. So maybe V shapes also, I want to see maybe a body closure potentially, because if I had waited for a body closure here on that V shape, we wouldn't have got it, and I obviously would have avoided that, and would have took buy side above, market structure shift back below, would have confirmed a continuation sell program. So maybe that's a possibility for V shape. So for V shape, right, I require fair value gap, which we did have, okay, and maybe body closure. These are obviously, I'm putting these down as things that I want to collect data on, right? I'm going to go back in price and see if it makes sense, right? If I see enough evidence, it makes sense, then I'll walk it forward and collect data on it, walking forward as well. Body closure. Obviously, if I backtest and I see that I'm missing a lot of trades based on these particular requirements, then obviously that'll be something that I would need to discuss. We need to have a a team meeting about that and discuss that and see how we can adjust, just based on the data, right? We can walk it forward. Right now I'm gonna walk it forward. I'm gonna go back into price and kind of confirm and get a gauge and if it makes sense, and then I'm gonna walk it forward and see if it makes sense. But for now, based on this current trade that I'm looking at, right? I already, as soon as it did that and it closed down here, I was like, yeah, I don't like that price action. I don't like it at all. It's not giving it didn't ensue any confidence in this setup here, specifically because there was no no liquidity rate below the external liquidity, which would have added more confluence for me personally anyway. All right, and V shapes, obviously, I want that displacement to be quick. I want no dilly daddling. At the time, obviously, it was a quick displacement and it was a bull candle at the time. It's still a bull candle, but at the time, it had more bodies to it, right? So maybe now for V-shaped entries, now we're actually starting to require more from V-shaped entries, right? And if it means we're gonna miss certain trades, that's fine. I'm gonna miss certain trades. I'm not always gonna be in every setup that pertains to my model, regardless. So I'm okay just looking for the pristine, what I believe to be anyway, for me personally. So for V shapes, we're gonna require fair value gap, which this did have, right? And obviously I'll have to wait for the fair value gap to be confirmed first before I even enter the market as well. But like I said, these are all things that I'm going to be collecting data on, okay, and just paying attention to see if it makes sense to add it to my procedures and protocols. That's what it's all about: data collecting and adjusting based on what the data is giving you. So V shapes require fair value gaps and body closure. So for this market structure shift here, I would have required a body, all right, to close above the short-term high, all right, to then confirm, hey, yes, this is a retracement setup that I can engage in. Obviously, for continuations in a discount in its premium and discount array, right? So we're already in a discount here below dealing range. We're in a discount, right? So for this continuation sell setup, because we're already in a discount, because I'm selling in a discount, right? Discount is really where I want to be buying, right? But if I'm selling in a discount, I require a little bit more from price action. So I would have required a body closure, the same thing that I'm saying for V shapes. I would have required a body closure below this short-term low, which we did get on this candle, and then obviously entry would be the next following candle. Okay, so that's how we could have avoided this loss here. All of that, right? All of that. I went through all of that just so I can see if this L could have been avoided, all right? And based on what we just came up with, all right, this loss could have been avoided, right? But it's not set in stone yet because I'm not gonna just uproot everything based on one data that I'm collecting here. Okay, so there's no upper V shape here to even go based off by. I wouldn't require think this as a V shape, and this on the 1 minute. If you wanted to call this a V shape, even though it wasn't because we took liquidity below anyway, there was no inefficiency. We did get body closure above, but there was no inefficiency here, so it wouldn't have been classified. Okay, so I'll pay attention to that moving forward. I'll also go back and pay attention to that as well, and this is why I need a central point in terms of all my setups. I need to start collecting them data, man. I've been slacking so much. But yeah, and then we saw this continuation sell setup. Like I said, I wouldn't mind engaging in this continuation sell after taking that L, even though based on what we know now, right, and procedures that we're currently collecting data on, we wouldn't have taken this as a retracement setup, right? We would have got that. This would have really been the only viable trade post opening range that I would have engaged in. So that's fair. That's good to know. All right, it's good to know now, right? Very happy with that information, and yeah, still would be in a sell solid stuff for me today. Let's do a trade performance review and get out of here. Let's do a trade performance review. What I did well today is that I showed up. All right, I got 1% better, 100% got 1% better just by showing up today and collecting data and being part of the market today. Learn lessons, gained experience I will take into my next trading day, next trading session. All right, even came up with things that I'm actually paying attention to, collecting data on that could avoid certain losses, right? I'm not trying to avoid all losses, right? I'm just trying to avoid the ones that I can have a role in avoiding. I want to avoid it, right? And that's me looking for specific characteristics and price action that I want to see before engaging in the market, right? Doesn't mean I won't take a loss, right? Even with these procedures and protocols, I'm still going to take losses, right? I'm just going to eliminate the amount of exposure in terms of the losses that I take. Yeah, showed up today, followed my procedures and protocols, and didn't deviate from it. Obviously, my current procedures and protocols, I follow them. Everything after that is new and is something that I'm collecting data on anyway. Yeah, followed my processes and didn't deviate, and yeah, very happy and pleased with my performance today. And specifically, what I'm happy about is that the fact that I took my L, right, opening range. I was patient. I'm like, you know what, I'm not gonna jump right back in, and I'm happy that I didn't, because I would have took another loss right then. That would have been my morning session just done like that, right? It would have been just done in that first 20 minutes, and that's not what I want to do. I was very disciplined in terms of saying, hey, I'm going to wait for the next opportune time post opening range, and then I'll anticipate a setup. I waited. Obviously, the setup came. Not knowing what I know now, I took it. It met the criteria that I look for in at the time, right? In the trades, and what I'm looking for in that trade. I engaged in it, took a loss, gave me the other side. After I already took my 2 losses, right? I could have jumped back in. I have 3 accounts, right? I could have jumped back in. But I maintained my discipline and being like, hey, I said 2 losses and I'm done for the session. And I took my 2 losses and I was done, right? It's about gaining control of yourself and not letting the market control you and dictate what you're doing, right? Because I could have easily go back in. And yes, it would have been a winning trade. I completely understand and I get that. It would have been a winning trade, but that's not what I'm here for. That is not what I'm here for, okay? All right? I'm still happy and pleased I got to witness that trade, but either way, I'll get them next time, right? It's about capital preservation for me personally, okay? Especially because I want to manage other people's money, right? I don't want to seem like I'm reckless with my own money. If I'm reckless with my own money, what the fuck you think I'm gonna do with your money? My God, damn, you know what I'm saying? But yeah, where am I? I just rambled, right? Supposed to end this in like 20 minutes ago, and I just been no, I've been doing something good for me personally anyway, and I miss this. It's been a minute. Where I fell short today, I woke up by a decent hour. All right, I got my morning routine in. Chart wise, I showed up. All right, I maintained my discipline and following my procedures, my protocols, my processes, and didn't deviate from it. Right, I'm still happy. I'm happy. I'm so happy and pleased with my performance today. Right, the outcome is out of my hands. It's not something that I really much want to be paying attention to or focusing on. Okay, the outcome's out of my hands. Today, the only thing I judge myself on if I showed up and I followed my procedures and protocols and I exercised discipline, which I did. Right, 2 losses, done. I didn't get back into the market. I wasn't like, oh, let me make those losses back. Let me make those losses back. Let me get back in. This is a clean setup. It doesn't matter to me. I'm happy that I saw the continuation sell. It sucks that I took 2 losses before I could engage in it, but that is what it is, right? That's what analyzing the losses, right, and putting procedure and protocols and certain characteristics that you want to see that obviously will increase the probability of your setups, right? Because obviously if I waited for a body closure for that V-shaped entry, then, right, it wouldn't have happened and I would have caught that continuation to the downside. So now, right, I'm 1% better, right, in terms of my procedure and protocols and what I'm looking for in price. All that to say, I don't think I fell short anywhere, right? I think I showed excellence in my performance today, really and truly. Yeah, pretty much so happy and pleased with myself that even after that first loss, I wasn't like, oh, let me get back in real quick, because I was about to do it. I'm like, you know what? Let's take a breather. It's just open range. Let's not use both our bullets right in the opening range in the lowest probability in terms of, time of trading. How I can improve for next day, next trading session. Obviously, we know what we're collecting data on to refine and improve our model, our procedures and protocols. Okay, so that's what I can focus on collecting data on that. Obviously, I'm going to go back into price action, and then I'm going to walk it. I'm going to go back into price action. If it makes sense, we're going to walk it forward, right? And then collect more data based on the current market condition. Keep showing up, keep seeking excellence in everything that I do. Don't let short-term adversity losses, series of losses, which I did take today in today's session. All pretty sizable losses that I can take though. I can eat these all day, every day. Like I can eat more. Give me more of that. I can yum it up. Yeah, keep showing up, keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me, distract me from what I got going on. I think I've got a solid foundation in terms of what I'm looking for. Now, just about the minor refinements, right, that we need. That's just gonna come with time and experience, right? And that's what I'm continuously doing and seeking here. Keep analyzing the data. Keep analyzing the data. All right, by analyzing the data today that we got from today's price action, right, from the L's that we took today, right, we're actually able to implement certain procedures and protocols and certain characteristics in our model that we need to see before engaging, all right, to allow us to avoid not all losses, right, but some losses, right? We could have avoided some today. Both of them, right, really and truly, we could have avoided. Once we analyze that data today, we could have avoided both losses. Obviously, if we had looked at the 1 minute, paid attention to the 1 minute in that first trade, right, we wouldn't have took that trade and we wouldn't have took a loss, right? Also, if we knew that we wanted to see a body closure in the V shape in terms of the market structure shift, right, then we wouldn't have taken that second trade and we wouldn't have taken that second loss there. So yeah, so now, right, we're refining, we're adjusting, right, based on the market conditions and the characteristics that we want to see for high probability entries and high probability setups. Okay, so yeah, so keep analyzing the data because that's what's taking me to the next level, and that's what continues to take me to the next level. Keep doing what's proven to be working for me, and keep taking small steps in the right direction, and eventually we'll get to our destination, right? 1% better every day. We're not trying to be 10% better. We're not trying to be 100%, 50% better in one day, in one session, right? We're just trying to be 1% better each and every day. 1% better. That's 0.5% per session that I trade here. 0.5% better morning session, 0.5% better in the PM session, and combined is a 1%, right? Just 1% better each and every day. That's my goal. That's what I strive to do each and every day that I'm here in front of the charts, right? And the outcomes out of my hands, right? But yeah, solid morning for me this morning. I ain't gonna lie, even though it was all else, it was still a good morning, and I take everything that I learned today, and obviously that's made me just that 1% better, right? For tomorrow, for PM session and for tomorrow as well. So yeah, that'll be it for us today here. I'm the Trader Capital. Yeah, decent solid morning. I won't change anything about it, really and truly. I won't change anything about it. I wouldn't change anything about it. And we're gonna wrap this bitch up. We have news tomorrow. We have news for the remainder of the week. Oh, until Friday. We're off on Friday. All right. So if you look at the economic calendar, right, this will determine whether I'm trading or not. Okay, whether I'm going live or not. If there's no medium to high impact news, if you don't see a red or green on the day, all right. On Monday we had the green, even though Monday technically wasn't an optimal trading day, because obviously we had a holiday on Saturday, 4th of July. Yeah, those protocols I need to iron out. But yeah, technically yesterday wasn't an optimal trading day, but I did take a trade. That's why I took that. Once I took that trade and I realized that, oh yeah, it wasn't a winning trade. I didn't even look at the markets for the remainder of the day. Obviously I looked at it, but like I didn't trade it. But yeah, if there's no medium to high impact news, it's not optimal trading day for me and you. I won't be live streaming, okay? Post holidays, all right? Post holidays, if you have a holiday during the week, the next day, I also won't be trading, okay? Post holidays, a no trading day for me is a sit still day. That's why Monday should have been a sit still for me day. Even though there was news, it still should have been a sit still for me day. But I misread my mentor's tweet, and then it is what it is. I just happened to have taken a winner for that day. I got lucky, really and truly. But I still followed my precision protocols, but I'm just counting as getting lucky. Anyway, we'll be back here tomorrow. Oh, it's FOMC, one stage FOMC. So I don't know if morning session is gonna be all that good, but we'll be here, kicking off at 9:15. All right. So yeah, once again, good stuff today. I like what I saw today. I'm gonna wrap this up. Before we wrap up, I want to leave you with this. There was a time that I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all three pillars: the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading. Happy bloody hunting. Remember, you only fail when you quit.